recent or rise. Imagine earning a steady. Okay, can another big plus. Can I try again? Welcome to Real Estate with Stewart Lim, a video series where we share valuable insight about real estate to add value to our clients and viewers. Today we are diving into the topic, going over the hedge and beating the inflation. Let's get started. Ever notice your favorite wonton noodles getting more expensive? You might call it inflation, but is it really? Let's break it down. What is inflation? Inflation is the rise in prices of goods and services across the board. If prices increase because of higher demand, like when a hawker store gets a Michelin beat gourmet, that's not inflation, that's popularity. Inflation is measured by the rates at which prices rise over time. A slow and stable increase indicates a healthy economy. But when prices rise too quickly, our purchasing power decreases. How is inflation measured? In Singapore, we use the Consumer Price Index to measure inflation. This is based on a fixed basket of 6,800 goods and services commonly purchased by Singaporean households. The prices of these items are tracked monthly to determine the inflation trend. Real estate is included in this basket, but in the terms of rental cost, but not capital appreciation. So when you see inflation rates, they don't reflect the prices of buying a new home. These are two types of inflation. Headline inflation includes all items in the CPI basket. Core inflation excludes accommodation and private road transport. For this discussion, we are focusing on headline inflation to see how much more expensive life has become. The rising cost of living. Over the last 20 years, Singapore CPI have risen by 52.1%. That means goods and services today are 52.1% more expensive than they are 2 decades ago. Think about it, $10 today buy you 2 plates of chicken rice, but in 10 years time, you might only afford 1. This is why people look for ways to protect their money against inflation. How do we hedge against inflation? Avoid keeping too much money in banks. Leaving your money sitting in a bank account with minimal interest won't keep up with inflation. Your purchasing power declines as prices rise faster than your savings grow. Growing your money over time salary are supposed to rise in line with inflation. But how many of us can say our pay rise truthfully matches the rising cost of living? This is why investing is crucial. Choosing the right investment vehicle, unless you are earning 6-figure salary, investing in a smarter way to grow your money and safeguard your financial future. Even high earners have investment plans to ensure their wealth continues to grow. Comparing investment options, let's look at different assets and how they perform as inflation hedges. Asset, real estate, Singapore private property, 20-year growth 4.76%. Pros, capital appreciation, rental income. Cons, high entry cost, low liquidity, risk level low. Asset stock, S&P 500. 20 years growth 7.7% compounded. Pros, low entry level, liquidity, dividends. Cons, volatile market risk, risk level high. Asset gold, 20 years growth 8.26%. Pros, liquid, hedge against fiat currency. Cons, no yield, storage needed, volatile. Risk level medium. Real estate as a strong hedge against inflation. Historically, property prices in Singapore have outpaced inflation by nearly 3 times. Here's why real estate is such a good hedge. Strong demand, limited supply. With limited land and a growing population, property value tends to rise over time. Economic stability. Singapore's stable economy makes property investment safer compared to volatile assets such as stocks. Rental income. Rent increase with inflation, ensuring property owners benefit from higher yield. Government support. Policy regulating the real estate market ensure price stability and growth. Capital appreciation. Over time, property values increase, giving investors a solid return. portfolio diversification, unlike stocks or gold, real estate is a tangible asset that generally holds its value. Why real estate over other investment? In Singapore, real estate stand out because of government intervention that ensure market resilience. Unlike stocks or cryptocurrency, property prices here are unlikely to experience a sudden crash. Another big plus, rental income. Imagine earning a steady passive income every month from tenant while your property appreciates in value. That's why real estate remains a top choice for long-term investment. Inflation is inevitable, but you can take the steps to protect your wealth. Whether it's stocks, gold, or real estate, understanding what you are investing in and managing risk is the key. And if you are considering real estate, now might be a great time to start looking at the market. As your trusted property consultant, I'm here to help you explore your options in the real estate market. If you have any question or need any assistance finding the right property, please don't hesitate to reach out. You can contact me at 9696-4398. Together, let's make the best property decision for you. Thank you for tuning in to Real Estate with Stewart Lim. If you found this episode helpful, please like, share and subscribe for more insight. We'll see you the next time.